Hello, chart watchers, and welcome to this Friday, July 5th, 2019 Market Watchers live show with your hosts, Tom Bowley and Mary Ellen McGonigal. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. Let's take a look at what's going on in the market as we end this first week of July. Dow Jones Industrial Average currently down 106 points, although it is significantly off its earlier low. The S&P 500 down 17, the NASDAQ down 48 and change. The Russell 2000 down about 7 points. The 10-year Treasury yield, big jump today. It is up almost 10 basis points, trying to get back up through that 20-day moving average. That would be the first time, as you can see, over the last couple of months. Volatility index did move quite a bit higher earlier. It's off of those highs, but still up almost 10% today. Financials leading to the upside, while staples, consumer staples, that is, real estate, and industrials are trailing to the downside. Each of these groups down more than 1% today. The Dow Jones U.S. Toys Index struggling, but this could simply be a retest after that breakout above the 840 level that we had been watching earlier today. The Toys Index, you can see, was down into the 820s. It's had a pretty nice rally off that earlier low, looking to perhaps put in a bottom today on this pullback. Home construction stocks reacting to that rise in the 10-year Treasury yield. You can see home construction down more than 2% today. Specialty finance pulling back. This has been a very strong area of the market. Most likely just some profit taking, but nonetheless, it is one of the weaker groups today. 3M, this is the weakest stock in the Dow, down more than 2% today. And the weakest stock on the S&P 500 is Electronic Arts. And you can see that is really just adding on to the weakness that we saw back on Wednesday. So a couple rough days for Electronic Arts. Okay, it is Friday, day after Independence Day. Mary Ellen, how was your day besides the earthquake?
Oh, yes, it was lovely. Quite wonderful. Lots of fireworks in the area that, in fact, my next door neighbor had quite the show going on.
Well, you had fireworks in the air and on the ground.
Yes, absolutely. Yeah, we talked about that earthquake, and it was really quite unnerving when the ground starts shaking beneath you, and it, it was.
The center was just north of Los Angeles, is that right?
It was in the Mojave Desert, so it was not immediately nearby, but it just was a lengthy experience because you just don't know, is it going to get sharper or worse? But yeah, it definitely was quite the shaker.
Yeah, I can only imagine. I can't imagine the ground moving. I'm an East Coast guy, so earthquakes. I mean, we've got all the hurricanes and stuff like that coming up, but we don't get into the earthquake thing. So I don't know. I probably wouldn't react very positively, I don't think, to the ground moving.
No, it's quite unsettling when your chandelier starts swaying.
Yeah. Was there any damage? Did your property have any damage?
No damage. No, it was not that bad where we were. It wasn't anything violent. It was just a consistent. We have 3 stories, and this top story was just kind of swaying.
Okay.
Yeah.
All right. Well, I tell you what, that was scary. I'm glad everything on your end is okay. I'm assuming. Have you talked to Erin at all?
She's quite a bit further south, so she may not even have even felt it, really.
Okay.
Yeah.
That some people were reporting they could feel all the way down at the Mexican border. I mean, that's.
Oh my goodness, I didn't realize.
But yeah. Anyway, okay. Well, I'm glad everything is good and that you're
yes,
and that everything was okay for you to join us on the show today. So that's awesome.
You bet.
All right, we got a great show coming for you on your screen. You can see the upcoming schedule. A number of great guests, including both John Murphy and Martin Pring here over the next couple weeks. That'll be exciting. Mark your calendars, July 22nd through the 26th, Relative Strength Week. We talk a lot about relative strength here on Market Watchers Live, and we're going to have a week devoted to it. So some of the experts, some of the great commentary folks that we have here at StockCharts will be on talking about relative strength, how they use it, and you're not going to want to miss that week. I think that's going to be really special. As far as today goes, we do have our what's hot, what's not coming. The 10 in 10, our first stock today will be Zion's Bank Corp. So we're looking at a bank, and tell you what, the banks have suddenly caught some fire here. So that'll be an interesting one to take a look at. So if you'd like to pull it up on your own chart, see what you think of the stock, you can see whether or not you agree with me when I go over Zion and 9 others during the 10 and 10. And then we will have 2 additional segments, U-turn and momentum sleepers. U-turn is a segment where we're going to look back to last week's turning point stocks, where Mary Ellen and I just took a look at some stocks that we thought were at some key pivot levels, and got some great feedback from that segment, by the way. A lot of folks thought that was very educational and fast moving and so forth. And so we're going to go ahead and follow up on those from last Friday and say, okay, did they do what we thought they might do? Did they struggle with key resistance? Did they bounce off support? Whatever. So that'll be an interesting segment. Then we'll wrap it up today with momentum sleepers. Do check out today's poll. We've got just a brief poll about the banks, because they are starting to show some strength, and focused on some of the large cap banks and whether or not you'd be comfortable owning those banks. And so you can just check off whichever ones you feel like are stocks that you are banks that you might be interested in. Okay, let's jump into the economic reports today. You can see June non-farm payrolls came in much stronger than expected. And if you recall, last month, they were way below expectations. I think the number came in around 72,000 or 75,000. There wasn't any major revision, by the way, to May non-farm payroll. So they were just weak. But June, you can see, did pick up. It's got a lot of folks that, talking about whether or not we're now going to get that rate cut later this month. I think there's plenty of other evidence that suggests we will get that rate cut. I think the market's still anticipating it. So I don't think this changes anything as far as I'm concerned, but some might view it differently. Anyhow, you can see the numbers did come in way above expectations. The unemployment rate did move up just a little bit, 3.7% versus the 3.6% anticipated. And then finally, their June average hourly earnings rising 0.2%, but that was slower than the 0.3 expected. So overall, I thought it was a pretty good report. And I'm not one of these people that are hoping for a bad report so that the Fed will cut. I would much rather see us have a stronger economy. So I think this is a really good report. I'm glad to see that we didn't get back-to-back weak reports there. Okay, the 10-year Treasury yield. What's the bond market think of all this? Well, you can see pretty big move here to the upside. We haven't seen a day like this in a while. The question is, do we sustain it? Mentioned at the top of the show, we hadn't been above this 20-day moving average on the 10-year Treasury yield in 2 months. And here we are trying to do it again. We're not there yet, but we did test it. We did get up to 2.07%. And if you look over here, that 20-day moving average right now is 2.062. So we did get up there, test it for the first time in 2 months. We'll see whether or not we can get through it, perhaps either later today or maybe next week. A move back through it, though, would certainly help the banks. And I think help the overall market, because if we do start to see a major or at least a more significant rotation away from treasuries, that money tends to go right into the equity market. So I would be pretty excited by a continuation to the upside in the 10-year Treasury yield. All right, let's go into, I was going to pull up, looking at these sectors. I wanted to go through the sector summary. And again, for me, this is one of the ways I start my day. I like to just, 10 minutes into the market day, I like to look to see what is leading and what is lagging. And if it's a common theme, sometimes I'll piggyback on it, maybe possibly trade a stock within a certain area if that area is beginning to show some relative strength again. But I just wanted to point out financials. This is a group that over the last 3 months during the second quarter of the year, financials were the best performing group. And what's really odd about that is that it's come during a period when we've seen falling interest rates. Normally, it's the other way around. Financials normally get their boost from rising yields and a rising or a wider yield spread. But that's not really what we've had here over the past few months. So I'm not sure. It's sending a message to me maybe that the financials have just had enough to the downside on a relative basis, and it's time for this group to move up. And if interest rates continue to go, this is definitely a group I would be paying attention to. Check out the banks. The banks have been making a nice move. We're going to talk about the banks a little bit later today, but I did just want to point out that this is a group that has broken out above recent resistance. If we look further back, you can see it's still within the confines of a wide trading range here in 2019. Really breaking back up above 465 is what we want to see. If we stretch this out to a weekly chart, a breakout above 465, I think also would be breaking this downtrend line. That's been in play for a while. And you can see right now the weekly PPO is sitting almost squarely on the center line. So we're looking for direction in this group. I think a rising 10-year Treasury yield would definitely be perhaps exactly what this group needs to get that breakout above 465 and to end this downtrend that's now been in place, really looking back over the last 18 months or so. All right, back to the sector summary here again. And I'm going to go in a little different way this time. Let's take a look at consumer discretionary, because there were a couple of areas I mentioned at the open that I want to take a look at the charts. First, the toys, not the individual stocks. Let's look at the chart. So first on toys, and I'm going to stretch this out a little bit. Let's leave it on a daily chart, but let's go back. Let's go back 2 years. And you can see off this downtrend, you see all this sideways consolidation right here around 840. And then finally, we made that breakout at the end of June, early July. As we go back down, it's, technical analysis 101 is really price resistance. Broken price resistance becomes price support. Broken price support becomes price resistance. Here, you can see the price resistance clearly. Throughout 2019, we could not get through that 840, 845 area. We got up to about 870, almost 880. And now we're coming back down, and that prior price resistance now becomes support. And you can see us here at this 20-day moving average and price support currently at 842. So this is a group I think worth keeping an eye on. I would expect a bounce here, by the way, on the toys. The home construction group. Now, I would really be watching the 775 area, because we've got an uptrend. We've got left side of a neckline ahead, a right side of the neckline, which is slightly lower. The right shoulder now has gone up and tested the moving averages and failing, and it's starting to roll back over. If the 10-year Treasury yield keeps going higher, that would be one of the headwinds that this group would face. And a breakdown below 775 would measure another 75 points back down to about 700, which is where we had these multiple lows in February and March. So this is a group I'd be very concerned about in the near term, because here on this daily chart, we are failing at the moving averages. The PPO is negative. There's a bearish topping pattern in play, but we don't actually confirm until we get a breakdown below 775. So let's watch for that. All right, scooter mover of the day. Let's take a look at, yep, here it is, VHI. Now, VHI, and I think I annotated this, so bear with me. VHI broke out above a prior high at about 270. You can see the scooter mover. Now, all the scooter movers I've been looking at have been rising scooters. Valhi, actually, you can see the scooter is dropping. It's down probably about 15 today, maybe a little bit more than that. But here you can see that we're coming back down and testing that 20-day moving average for the first time during this uptrend. So I'm not a fan of losing that price support. Here was the prior price resistance coming back down below that, but I would give it the 20-day. If you look over here, similar type move back in January, huge move. First time we tested that 20-day moving average, it held, volume came back in, and we ended up going higher. So that's kind of what I'd be looking for here. And by the way, that scooter was dropping when we were pulling back, just like it's dropping now. So I'm not a big fan of this stock. I wouldn't buy it because I don't like the group and its relative strength. I'm just saying that when I look at the scooter, it does point me to a stock that's coming back down, testing a key support level. So even the scooter movers to the downside can present some nice opportunities on the long side. So for that reason, VHI is your scooter mover of the day.
Very good. And I'm going to go ahead and today we normally do upgrades and downgrades, but there was not a lot of activity. I think a lot of analysts are taking the long weekend. So what I've done is highlighted stocks that are due to report earnings, and earnings season is going to start in earnest mid-July. That's when those big bank stocks start reporting, and then a lot of other companies, of course, join in. But there are a couple of companies that are going to be reporting over the next couple of weeks before that mid-July. And I'm looking and going to take you to show you stocks where their estimates have been revised upward or downward over the last 2 weeks. And this is really quite relevant because as you get into earnings season, you'll find that those stocks where analysts are revising estimates higher, historically, they will go on to come in ahead of estimates. That's just an average. So this first stock that we're looking at here is Delta Airlines. We're looking at a daily price chart. Delta, the analysts are raising estimates for this stock, and you can see that it's had a very strong uptrend here. Delta has been reporting very high traffic numbers, so the stock did get extended. It's pulling back a bit today, so this could, we can see that golden cross, the 10-day simple moving average up through the 50-day in a positive fashion, and the stock is poised to break out of a 7-month base. So quite constructive there. Let's take a look at another airline stock. They, if I didn't mention it, Delta is due to report on the 11th of July. This is United Airlines. They're due to report mid-July, and it is another airline where they are revising the estimates higher. It also is breaking out of a shorter term 8-week base. And we can see that the RSI is positive, as is the MACD, so very constructive. Again, they're not due until mid-July. And then I mentioned some of these bigger bank stocks that are going to be reporting. This is JP Morgan. July 16th is their due date, but analysts are revising estimates higher for 2020, for next year. So we can see this is in line. Tom was talking about these bank stocks are getting traction. They're starting to move upward. We can see the MACD just trending upward on JP Morgan ahead of their earnings in 2 weeks. So let's take a look at some stocks that are being downgraded as we head into earnings. The first is JBHT. This is, of course, the trucking stock, and we can see it really has been in a terrible declining phase already, but analysts are revising estimates lower. They're due July 15th, as is a rail stock, CSX, and this one is holding up quite a bit better. But analysts are revising the estimate lower for this. We can see that the MACD and the RSI, it's kind of trending sideways. Not a lot of action in this particular stock. Charles Schwab is also due to report this month, again on the 15th, and analysts have been revising this one a bit lower. And we can see that the stock, in fact, is really not doing quite well at all. It has been in a downtrend. When you have these longer-term simple moving averages, this is your blue is your 200-day simple moving average. We can see that it's trending downward, as is the 50-day. So as these stocks that are downtrending similar to this, as they attempt to reverse, you'll see that they find resistance at these downward trending simple moving average, very heavy. Now more recently finding a resistance at this downward trending 50-day simple moving average, so not very constructive at all. And then the last stock that we'll look at is due to report next Friday, and analysts have been revising estimates downward on this one. This is Infosys, INFY, and it really only has single-digit growth. Analysts are calling for 6% earnings this year, 9% next year. So we can see that realistically, this stock has not been participating as a number of other tech stocks. Tech stocks are, of course, doing really quite well. This one is not participating. And we can see that the RSI is poised to potentially trade negatively here. And we've had that negative crossover on the MACD down here, so not very constructive. And we will be right back with what's hot and what's not.
The ChartWatchers newsletter features expert technical commentary about the current market from some of the industry's leading technical analysts. See what's really happening in the markets through their eyes and gain an edge in your own investing. The newsletter is packed full of insightful and educational articles intended to help you become a better investor. Whether you are brand new to charting or a seasoned technical analyst, each edition will provide a wealth of informative content. It's the best way to stay informed on all the latest news, events, updates, and additions here at StockCharts.com. Whether it's a new feature or blog, an upcoming conference, or a special sale, you'll hear it first in the ChartWatchers newsletter.
Welcome back. We are going to go ahead and get started with what's hot and what is not hot. And it has been a very interesting week despite the holiday shortened period. A lot of action. And the first area that we're going to key in on is computer software stocks. And a lot of these stocks, I know Tom and I have talked about it throughout the weeks, a lot of leading stocks here. These are really outperformers. They're having another good week. The first name we're looking at here is Coupa Software, C-O-U-P. And you can see this really nice uptrend that the stock has been in as it finds support at this upward trending 10-day simple moving average. That's your green line. Your RSI, MACD are all quite constructive. And the stock is up about 5% on the week and very constructive, positive. This is a high growth, high octane name. The next name also in software is ServiceNow, N-O-W. And this stock has had a bit more of a difficult period where it has suffered a bit. May was, of course, a tough period for a lot of stocks, but overall it held in really quite well. And when you are in periods such as May, when the markets really deteriorated and the stock does not go down quite as much, oftentimes that is a sign that the stock has leadership characteristics so that when the market pressures lift, that stock will outperform. And we are seeing that now with NOW. It's just poised to break out of a 2-week base. And by that I mean the stock attempted to hit a new high here, pulled back, and is now approaching a new high again. We're not going to get those volume characteristics, certainly not today. We can see that the volume metrics are down across the board, but certainly very constructive looking. Cadence Design is another one, and the ticker is CDNS, another winning stock. Take a look at this huge move here from the beginning of the year into that May period, and it is now amping back up. The stock is in a very confirmed uptrend. RSI is positive, as is your MACD. And we can take a look at Shopify, S-H-O-P. This is another leading software stock. And by that, I mean, take a look at this outperformance going into, and really May did not even touch this stock as far as it getting hit. It really held in, again, remarkably well. It's faltering a little bit here, not really participating with the others, but overall it is having a good week. And then one other area, I can't leave software without pulling up Splunk, S-P-L-K, and we can see that this stock really did not participate with the other software stocks in the beginning of the year, so it would not have those leadership type characteristics, but it is reversing this May downtrend currently, and it is up about 3% for the week. We can see the RSI is positive, MACD just poised to turn positive above that net neutral zero. So those are some software stocks. I'm going to turn now to some what I call leisure stocks, and we're seeing some really big moves in some of the casino gambling related. This is Wynn Resorts, and we can see this gap up here earlier in the week. This is all about Macau. They have a big presence there, and Macau came out with numbers that were really quite strong as far as traffic to their Macau location. We can see that this gap up the green simple moving average is your 10-day up through the red. That's your golden cross. Your RSI, of course, is quite positive. MACD just going up above this net neutral zero in positive fashion. So we are on our way to potentially reversing this May downtrend. Another casino stock that's also Macau related is Las Vegas Sands, LVS. And again, we can see that same dynamic with that gap up, the shorter term simple moving average poised to cross up. So quite constructive there. Let's take a look at Netflix. This stock is having a very good week. They are due to report July 17th, so we are still 2 weeks out, but it's very constructive here with this stock poised to break out of this base. And they are showing really great numbers as far as subscribership. That's what you're going to want to key in on when they report in 2 weeks. But we can see that your other metrics are quite constructive as far as the MACD turning positive and your RSI up here trending upward and above that 50.
Mary Ellen, I just wanted to point out too, I thought this was a really interesting chart that you're showing here, because since Netflix gapped down all the way back in July of last year, that huge gap down, we've come back up close to this 390 level on multiple occasions. We saw it back at the beginning of October. Later in October, we came back up, got close, and then you can see back March, April, and early May did the same thing, and now here we are again. So a break above 390, I think, would be a really, really big move technically.
I agree. And that would really send, what we can do is go ahead and pull up the weekly, and that will give you a bit more in the way of perspective. And this is what Tom was talking about. We are right here at this level. So in that 390-400, if we could break above that, that certainly would be very, very constructive for that stock. I'll go ahead and pull up another name. I know this is Roku. Tom has favored this one during our roundtable. We did pop culture stock roundtable, and I know, Tom, this was one of your picks, and we can see this gap up on earnings, and it faltered a bit here, but take a look at how it's reversing. The stock is up 4.5% for the week. This is a weekly chart. We can see the RSI trending upward, so potentially reversing this near-term downtrend.
Yeah, and I wanted to also take a look at some of the banks. I mentioned earlier that I was going to talk about the banks. I have mixed feelings about the banks right now. Obviously, the 10-year Treasury yield rising today is helping the group, and a sustained move could change this downtrend, this relative downtrend. But I just wanted to point out that, sometimes you look at the absolute chart, and that's what this is. This is a weekly absolute chart. And so you can see off the bottom in December, we went up, printed a high in April, we put in a higher low, and it seems like things are looking pretty good. But you have to take it in terms of relative strength to the benchmark S&P 500. And since we topped back in January of 2018, this relative strength line continues to drop. So if you're excited about the banks moving higher, and that's the only thing you're considering, then I think the banks look like a pretty good area to be in the market right now. My problem is that even when they go up, they just don't go up as much as the S&P. And so that needs to change before I would get really excited about them. But it's still been a good group. And you can see since the middle of June, we are starting to show some relative strength in the group. It's just whether or not we can break this 18-month relative downtrend. Notice also that the weekly PPO, this weekly relative PPO, has been in negative territory now for over a year. And so that just tells you it's really an area you want to stay away from. You don't really want to be in the group until it's beginning to show relative strength and breaking above, downtrend lines and so forth. So with that as a backdrop, I'll go through some of these banks that I think are interesting banks. For the most part, I'd try to stick with banks that are outperforming. That way, if the bank group does strengthen, you've got one of the leaders going forward. And if the banks were to weaken, you've got one of the leaders going forward. So I don't want to be mired in some of these banks that are underperforming. So let's take a look at some of them here, though. First is Banco Bradesco, right up against key resistance at about 10.25. So I'm a little concerned about it because it is hitting this intermediate term price resistance. But the overall chart uptrend looks like maybe a long-term kind of a cup, at least maybe it's cup-ish. But this is going to be an area where we do need to try to get through. On a relative strength basis, though, you can see a little bit about what I'm talking about. BBD is close to its 52-week high relative to the bank group. So if the banks do continue strengthening, I would expect this to remain one of the leaders and to outperform the group. Watch for that breakout. Next up within this space, let's take a look at BSBR. This is a Brazilian bank, Banco Santander, and just breaking above this area of resistance. It's actually 4.5 month high on its absolute chart, and then strengthening down here. It's been strengthening for about 6-7 weeks on its relative chart to the banks. But it has had a great week. Nice gap up today with the 10-year Treasury yield rising. We are, at one point, I looked at the S&P 500 leaders today, and of the top 10, probably 8 of them were banks. So the banks really having a strong day on a relative basis today. We'll see if that continues to hold. All right, EQBK. Now, this is a different animal. So I talked about a couple that were showing some relative strength. Look at this stock. It has been a relative laggard versus the banks. So the banks have not been good, and this stock has been one of the worst ones. So when I see the strength in a stock like this, I get a little nervous, because if we annotate it, you'll see that we're right up against a couple of key levels. First, we broke down on very heavy volume in April below this low at $28. Where are we sitting? $27.78. So it's been a nice uptrend, but now can we get through that level? Also, notice that we've got the bottom of gap resistance, and there's the top of gap resistance. So I think you're going to have a lot of sellers to try to get through in this 28 to maybe 29.5 level. So I would rather favor some of these other banks that I think look much better technically and have been performing much better on a relative basis. Next up, PNC. This is one of my favorites right now. And I think you'll see it a little bit on the chart here. Beautiful move up, volume coming in to start this move and getting this breakout here. We're talking about now being at about a 9-month high on PNC, maybe close to this high, which would have been 11 months ago. And look at the relative strength, breaking out to a new relative high. This is the type of stock that I would be much more interested in if I was going to own a bank stock. BPOP. Nice move up. This one was struggling for about 6-7 weeks. You can see the relative strength deteriorated, but it's coming back up again, and we're seeing the relative strength again as well. Just watch that 20-day moving average. If we are trending up and we do have a leader, we shouldn't be moving back below that 20-day moving average. GGAL. And just a couple more of these. GGAL I like, except you can see that false breakout here above this 37 level coming across. That's signals to me that maybe short term we're going to get a little pullback. But if we did, back to that 20-day moving average, again, you've got a stock that's really accelerating versus its peers on a relative basis. So a 20-day test to me would be a great opportunity to get in. And then the last one I want to show you is one you probably all recognize, JP Morgan. JP Morgan, look at JP Morgan sitting near a 52-week high relative to the bank index. So again, you've got a stock that struggled to get through this area of resistance at 116, came back down. I see a reverse head and shoulders that we broke out with heavy volume at the end of June. And I think we're just continuing to move up here. This, by the way, from about 111 down to 104 would measure to 118, which would actually give us that breakout. So JP Morgan looking like a pretty good one as well. What else do you have for What's Hot, Mary Ellen?
Yeah, so I'm going to go ahead and zone in on some of these retailers with the announcement last weekend regarding the U.S.-China trade relations. A lot of these, some of these retailers did get hit because they import quite a bit from China. This is Dollar General, DG. This gap up here is all about the earnings. They came in with great numbers. We can see the continued rise subsequent to that. And then, of course, trade war fears dipped a bit, but the stock is poised to break out of a nice 2-week base here. We can see the RSI and the MACD are both in positive territory, so we could certainly see an acceleration from here. The next retailer that is having a good week, it's up about 6%, but we can see not as dynamic as certainly Dollar General. This is Five Below, FIVE. The company did come out with earnings and they were flat, and they also did guide lower going forward. But we can see that this current period here, it is attempting to reverse this downtrend. This, of course, is that May difficult period for the markets. We can see the RSI is poised to turn positive, but it is going to have a lot of work to do here. Needs to break up above this 50-day simple moving average before turning positive. And then another retailer that has really had a good year, but certainly recently has been struggling. This is Etsy, ETSY, and the stock is another one that is attempting to reverse this near-term downtrend, but we're not quite there yet. If we could see a break again up above this 50-day simple moving average would be quite constructive. The RSI is not confirming this near-term downtrend reversal yet. The RSI is just poised to turn up above that 50, and the MACD is in negative territory. So it certainly has work to do. It's up about 4% on the week. And we can look at one other retailer. This is L Brands, and the ticker is LB. Take a look at this. It really has been turning here of late. The stock is up quite a bit for the week, 6.5%. And right here, in here is where we had an earnings report that was constructive. Analysts are raising estimates for both this year and next. And another name, actually, let's go ahead and move on, because we are seeing a number of biotechnology stocks that are picking up, but I'm going to be showing you some charts that are looking interesting among the biotechnology. This one is AMRN, and we can see the stock is poised to break out of a 4-month base. Take a look at this volume. We're in a period this week where not a lot of stocks are getting a lot of volume, and in fact we are here on this breakout, so quite constructive. Look for this one to trade higher. RARX is another biotech stock. This is RA Pharmaceuticals, and this is another one. It already did have this explosive breakout here, and we are looking at a daily price chart, and this is last week, of course, on Friday, big volume, but we are picking up also with big volume this week as well as the uptrend continues for RARX. Another stock that we can take a look at. This is a smaller biotechnology, but it did get added to the Russell 2000 and Russell 3000 index this week, which is helping support this stock. And I like the fact that it pulled back to this 50-day simple moving average, is forming the right side of this base, poised to break out. The stock is at about 15, and if we can break above that 16, the stock will be breaking out of about a 6-week base. Again, we're seeing a nice pickup here on the volume during this holiday shortened week. And one other area that we can go ahead and move on to that is doing well, there are some standouts, and that would be internet related stocks. And the first name that we can take a look at here is Zillow Group, the real estate group. And we can see that the stock has in fact picked up quite a bit this week after a bit of a fallout last week. And the stock has now broken out to a near-term high in price. And so we do have that nice breakout here. We also have positive here on the RSI trending upward in positive territory, as well as that MACD. And another internet related one is Match.com. MTCH is the ticker. This is another stock that it did deteriorate in May, but not as much certainly as a lot of other stocks. So it did show superior strength. Here we are with the markets having a fairly constructive week, actually a very good one, despite today's decline. And we can see that the stock is up another 1.5% today, poised to break out. If we could get up above this 75, we're right now at about 73, that would be really quite constructive for this continuation of this near-term uptrend. And let's take a look at Twitter, TWTR. This stock is up for the week as well. And it's up almost 4%, but really it does still have work to do before I would turn positive, because we can see that in line with this May period, it really has not been participating in this recent rally. We can see that the RSI is just at that net neutral. Your MACD is still in negative territory. So despite having a good week, it does still have work to do as far as getting up above this 50-day and potentially breaking out of a base. And then one last area that we can take a look at is computer networking stocks. And the first one up here is Cisco. And we can see Cisco was a very big winner going into that May period. And since then, it has had quite a bit of bouncy rockiness here as it's attempting to break out. So 57.5 is that area where it is continuing to find upside resistance. The stock is having a good week this week, but we would need to see a breakout above these levels before sensing that Cisco could have more upside ahead. Another stock in this networking computer networking area is Arista Networks, ANET. This stock had this period here in February. The stock gapped up on tremendous earnings. It went on to great heights, but this is a period here where the company did report a rather lackluster earnings, and it gapped down. We're in the period now where it is potentially reversing this downtrending period here. So it's very, very promising looking. We can see that the RSI is positive, your MACD just now turning positive, and we are now above this key potential area of resistance. So I would keep an eye on Arista Networks. It looks poised for potential more upside. And Tom, I'm going to pass the baton back.
All right, we are going to switch over now to what's not been hot this week. And I got to say, we saw the Dow Jones, S&P, and NASDAQ all move into record high territory on a closing basis on Wednesday. And so there not a whole lot of downside, but we found a few pockets. So we'll talk about that. Industrial machinery, and I have this up on a relative basis to the S&P 500. So what you're going to see, and these are weekly moves. So you can see right here, this is a pretty big down move on a relative basis in industrial machinery over the last week. And it's actually breaking here to about a maybe 5 month relative low. And you can see that weekly PPO, which is a relative momentum indicator, is starting to move into negative territory. So this is an area that I have traded some because of the strength that we saw earlier in 2019. But this is starting to make me pause a little bit here. And this is a group I think that needs really some buyers to come back in. So where do we go in that area, or what has been struggling? Well, Kennametal, KMT, has really struggled this week. However, even though it's one of the worst performers in the group, you can see it's been downtrending now for about 7 months. Look at the volume that's come in here to the upside. And now it's pulling back and it's testing the 20-day moving average for the first time. But the way I look at a stock like this is, if it's not a great relative performer, but it's starting to show signs of strength, I just want to make sure I keep a tight stop. Don't make excuses for stocks that are underperforming, because you could simply be a couple of days away from a fundamental announcement, maybe an earnings warning or something like that. You want to be careful with these stocks. But this is going to be a key area of support. If you go back, you'll see that back in November, we did something similar. We were moving up off of a downtrend, nice volume, and notice these 20-day tests were holding. We didn't have a close below the 20. Once we did, you wanted to be out. Same thing over here. Nice move up, get back down below this 20 moving average. You can see not good action, right back down again. So that's why I'd be paying very close attention here. Another one, PRLB. This is one pulling back to the 20-day moving average as well, but another very, very poor performer. So I'm going to have to keep a tight stop, but this has had a really rough week. Now, one on the flip side that I actually like is Ingersoll Rand, because when you look at it, it is one of the leaders in the group. So if the group bounces back, this is a stock I would expect to be very strong. And if you notice, this 122.5 area has been holding. Today's low is 122.97. I think this is a stock that I think looks very good. What do you see this week, Mary Ellen, as far as weakness goes?
Yeah, so I agree with you. It was certainly an overall bullish week for the broader markets. So a lot of the names that I'm going to be sharing with you are those that are in confirmed downtrends already, and those downtrends are continuing. So it's first name up is Big Lots. BIG is the ticker symbol, and you can see really just how hurt this stock did get, certainly more than other names in May, but it has not been able to get up off the mat, if you will, and you can see that the stock is continuing. And when we talk about stocks in a downtrend, a confirmed downtrend, you want to pay attention to these simple moving averages, which are now this blue line is your 200. This is your 50 and your 10-day. And as they trend downward, any type of downward reversal attempts will, by and large, be met with resistance at lower and lower levels as these moving averages continue to trend downward. Another retail stock that we can take a look at that is suffering this week as well is OLLI. This is Ollie's Bargain. And we can see from this period here, when the stock just started tipping, they did come out with earnings that were rather flat. Their same store sales were not robust. So the stock, once it starts breaking down below these moving averages, and then as I talked earlier, these moving averages start to roll over, then again, your resistance gets down here at lower and lower levels. So the stock is continuing to suffer. Also, when you see these higher volume days on your down days, that is indicating a stock that is under distribution. Another underperformer in this retail space is Land's End, LE, really just DOA. Again, all of these moving averages trending downward, creating a very, very heavy pattern. And the stock is continuing its decline this week. Let's go ahead and move on to look at some of these restaurant stocks. The first one is RRGB. This is Red Robin Gourmet Burger. And really not a pretty chart by any standards. We can see that it's been in a very lengthy declining downtrending period. Let's go ahead and pull up a weekly so you can get a little more perspective. The stock peaked here in price back here in mid-2015 and has had brief periods of trying to reverse that, but by and large, the stock is just the stock has really been in quite a confirmed downtrend for some time. Another restaurant name that is not healthy looking is Bloomin' Brands. And take a look at this diciness. We're looking at a weekly chart. I'll go ahead and pull up a daily, but it's still going to be not pretty, if you will. These Blooming Brands is Outback Steakhouse, for those of you not familiar, and the stock is continuing to decline despite analyst upgrades at the beginning of the week. It's just not helping. The stock continues to deteriorate. RSI is below that net neutral 50, as is your MACD. So the stock looks poised for more continued potential downside. I'm going to take a look at a couple of software stocks, and we can see the first name here is PAR Technology. We talked earlier about how these software stocks, how they have been really doing quite well. So when you see a name that's not participating, it's really going to be concerning. The stock is breaking down below, again, this key critical 50-day simple moving average. This green line is poised to cross down through the red. That would be a death cross. That's just telling you that the momentum is now deteriorating. So we can go back to prior periods just to see what can potentially occur. And we did try and get an attempt at rally, but not so. Currently, it does appear to be rolling over. Your RSI and your MACD are quite negative. Let's take a look at another software stock that is not having a particularly good week. And I can go ahead and pull up the ticker symbol here, PRGS, it's Progress Software. And this, you can see it had a gap up last week, but it is not only erasing that, it is down quite a bit more from there. So the stock really is in kind of a net neutral. It really is a smaller name that has quite a bit in the way of volatility, not very attractive looking chart. But this last week was due to positive earnings. And again, it is giving that all back and then some. Another software name that is not participating in this week's rally. As you recall, we started by showing you some of the more powerful and positive software. Not so with this. This is Real Networks, RNWK, and we can see that it peaked here this year, back here in March, deteriorated with the broader markets, but quite a bit more than the broader markets. And we talked about leadership names are those that withstand downward market pressures, quite the opposite in names such as Real Networks. When they go down even more than the broader markets, certainly that is telling you that this is a weak stock, and sure enough, it is not participating in the recent rally. Those longer term simple moving averages, very, very heavy pattern, certainly not a stock to look at on the long side. And that is what's hot and what's not.
Wow, it was a mouthful. There were a bunch of them, but yeah, I mean, overall, great week. Anytime we're moving to all-time record highs, I find it very difficult to be negative. The market, I don't know how you feel about that. I mean, I know a lot of people look at it and say, oh my gosh, we're at a high. This can't last. And so they want to get out. But I find it just the opposite. I'm a momentum trader. I love it breaking out to new highs.
Absolutely. Lots of big, powerful names out there that are participating and outpacing the markets that we covered in the beginning.
Yeah. Good action.
Mm-hmm.
Well, we are going to move into the 10 and 10, excuse me, and we have this bank theme going on today for sure. First stock is going to be Zions Bank Corp. This is I think this is a regional bank. I'm not really familiar with it. I mean, I'm used to seeing the chart, but I'm not familiar with the fundamentals.
I think they're in Utah.
What's that, Utah?
I believe so. I can...
All right. Well, you can see, I mean, I have some issues with this stock. We've talked a lot about banks. I talked about some earlier that were performing really well on a relative basis. Look at what Zion's been doing over the last 4 months. So the overall group, when you look at the banks on a relative basis, they've been declining. On an absolute basis, they, for the most part in 2019, are just going sideways. So you're losing ground to the S&P 500 if you just have the average bank. Well, if you have a less than average bank like Zion, then what you're going to find is that you're mostly moving lower. And that's what we've been experiencing here over the past 4 months or so. Major support level in here at 43. With the overall group moving higher, it would be devastating technically, really, for the stock to break down below $43. To the upside, I see a lot of area of resistance. First, you can see this gap down here on pretty heavy volume back in May, second week of May. When we got back up to start July, we got very close to that level, couldn't get through. Well, we've got to negotiate both the bottom of gap resistance and the top, and then you've got the trend line coming down. So 47 to about 48.5, a lot of overhead resistance. You got a bank that's not performing well. If there's one positive, I wanted to put a positive spin on this one. It's that the last pullback held that rising 20-day moving average, and we're bouncing off of it. But just keep in mind, we've got a really good bank environment here over the last week. So it's doing well, but I think it's still got a lot of work to do. I would pass on Zion.
Okay. We have some great tickers today. This next one is gold related, GDXJ.
Oh, okay. GDXJ, the junior gold miners.
Mm-hmm.
And actually, let me go ahead and put this on a different chart. Relative charts don't work for these ETFs. Here's the deal. I still think the dollar could go lower. So I am short-term bullish gold and the miners, but I'm also cognizant of the fact that the long-term trend in the dollar is higher. So it may go down a little bit in the short term, but I still believe we go higher in time. So I would not buy anything in gold and just put it away. I don't think that's the right move. I think if you look at the last 8 years, the relative weakness in gold and gold miners and so forth has been pretty obvious. So I think as long as we're holding the rising 20-day moving average and major price support levels, then I would tend to be okay. So GDXJ, I would be watching the recent low, certainly the low on July 1st, 33, maybe the bottom of gap support. This is an area I think needs to hold, though. Just keep in mind the long-term relative line is down in gold. And so if I start losing key price support levels, I would have very little patience. So I think it goes higher, but I would have my stops in place at the event that it doesn't.
All righty. The next one is EPAM.
All right, EPAM. And we'll go back to that relative chart here. It's just sideways consolidating. This is could actually be one of our momentum sleepers, in my opinion, because it looks like the relative strength is weakening, but it hasn't lost any major price support levels. It's just, it made a huge run from 105 to 180, and it's just consolidating those gains. So I would just pay attention to the price levels here. I think your overhead resistance clearly is up around 180. To the downside, I would say pretty close to about 163. So that's about a 10% trading range there. Let's see which way it breaks. I suspect it's going to break to the upside.
Very good. And the next one is a very strong defense stock, CAE.
All right. CAE, yeah, beautiful breakout. Very, very strong relative strength. So, yeah, I agree with you, Mary Ellen. This has been a really good stock. And for those maybe who want to see it visually and what I'm talking about, check this out. So last 4 months, it has been straight up relative to its peers. And the other thing that that I really like is on this huge volume candle right here, massive volume. That is essentially a Maribozu candle, which is where you open on the low, close on the high, and it's one of these big candles. It just screams at me that there's accumulation. And the pullbacks, notice, never went back below the top of gap support. That is usually the support area I watch. So we got all the way up 27 and change, came back, got close to the 20-day, tested it here, and now rising again. Good volume trends. I see this one going higher.
Very good. This next one should have been in our What's Hot. It's mortgage related. RDN is the ticker symbol. It's having a nice week.
Okay, RDN. Let's see, Radian Group. Yeah, very, very good week. It is up against resistance, but it's a strong stock within the mortgage finance area. So I have no qualms whatsoever being in a stock like this. It's in a strong group. It's a strong stock within the group. And you can see that right now it's just simply sideways consolidating, a move to the upside. Now, I wouldn't jump in here because literally you're right at resistance, but a pullback to test that 20-day moving average, and I would have no problems.
All right. We have a bellwether FANG stock, Amazon, AMZN.
All right. Yeah, Amazon is, it's Amazon, so it's a great company. It's coming back up. Again, you've got overhead resistance. Thing that bothers me a little bit is just this relative weakness that it's seen for the past 60 days or so versus its broadline retail peers. I would probably look elsewhere for Amazon. I'd always keep it on a watch list because it's a loved stock, and when it does start to show relative strength, you want to be in it. But right now, I think it's getting close to an overhead resistance level, and it's showing overall relative weakness. So for now, I would just pass on it.
Okay, next one is a sleepy biotech named CRBP.
Right, CRBP, Corbus Pharmaceutical. Not really familiar with this one. Just sideways consolidation, really, but that's not horrible considering what the biotech group has been doing. It's just kind of a 50-50 performer, middle of the road, I'd say. I like the space in July historically, so I'm watching for good things. Right here, you can see biotechs. I want to go ahead and mark that level because I think if biotechs break out, that certainly would be a bonus. But when we came back up here and tested that recent high, you can see we actually are starting to see a little bit further deterioration in relative strength on the stock. So I got mixed bag here, but I'm going to just, over the last 3-4 months, you can see that we've been trading in this range. Let's see which way we break. If I was going to take a shot, it would probably be down here around the 655, 660 area, just because that's where we have been finding a lot of support for the stock.
Very good. We have a home builder, PHM, Pulte.
Yeah, home builders, like I said, really struggling today with the rising move in the 10-year Treasury yield. But let's take a look specifically at Pulte and see what we've got. It's been one of the better performers, as you can see, been trending higher. The group has been, until the last couple of weeks, the group has been very, very strong versus the S&P 500. I would just get back to watching this level because I mentioned it earlier in the show. We've got a potential topping head and shoulder pattern, left shoulder, neckline, head, right side, down sloping neckline, right shoulder, down sloping shoulders. I would be careful if we break below 775, even one of the stronger stocks within the group. If the group breaks down, there's going to be less money for Pulte. So maybe watch the group, and then also I'd be watching this level around 3080 on Pulte.
All right. And we have a small cap name breaking out, UFPT.
UFPT. Yeah, I don't like the volume. I mean, we got a $41 stock that today has traded 2,000 shares. So I'm not going to be too excited about trading a stock like that because of the lack of liquidity, but it is a relative winner. I mean, it's been a pretty nice stock. So I think if I was trading it, and again, I wouldn't because of the lack of liquidity, but I think pretty clearly we have a support area that comes in. You can see this prior high failed right here in April, finally made the breakout. You can see the volume really picking up as we made this breakout, and look at the recent test and hold of price support at about 39.5. I think I would be, 50-day moving average is coming up right underneath. So I'm going to say 38.5 up to 39.5 is a pretty key support area on UFPT.
Okay, our last one, UAA, Under Armour.
Right, Under Armour. And oh yeah, I like the breakout and then the test of support. And I like the fact that it's doing all of this with its industry group close to a 52-week relative low. So it's impressive. But because it is in a weak group, I'm going to watch that price support level very closely. I think when you look across here, double top November and December, tested it again in May, volume picks up, we break out, so far holding to the downside. I think this is in a range right now, 24.50 to 27.50. It's a great relative strength on the stock. So I think we'll probably get the breakout. I would just be really careful if we go down and lose that 50-day moving average. And
Very good.
That is the 10 and 10. You can see the stocks that I just covered right here on your screen. These charts will be included in the MarketWatchers Live blog, so feel free to check that out later if you'd like. When we get back, we'll check in on a market update and go over a couple more segments to wrap up the day.
Hi, I'm Arthur Hill.
And I'm Julius de Kempenaar.
And you're watching SCC TV.
Okay, welcome back, everybody. You can see on your screen the candle glance of a number of different areas in the market. Let's quickly go over it. You got the Dow Jones Industrial Average currently down 56 points, still battling back from those earlier losses. S&P 500 now down just 11. NASDAQ only down 31, holding the area of the breakout, which I think is really important here as it moves back up. Russell 2000 down 3 3/4 points. Not too far, though, from the highs that were established back in early July. 10-year Treasury yield up about 9 basis points, 2.04% off the earlier high. I want to see how this closes today. Volatility index continuing to move lower. We're up 7.5% today, but the overall trend here is clearly to the downside. The financials leading to the upside. Still some weakness in these three areas, these three sectors: consumer staples, real estate, and industrials. The toys, as I mentioned, top of the show, still trying to bounce back, now back to 845. I think we're around 842 when I opened the show. And then we got the home construction group struggling today. Specialty finance coming down, but this is a group that had been up very strongly in the previous 5 sessions. And then on the Dow Jones, weakness in 3M. And on the S&P 500, we've got electronic arts with a couple of really rough days, trying to move off of the lows that we saw earlier today. All right, we are going to move into U-Turn. This is a segment that we started not too long ago, but the whole idea, Mary Ellen, is a week ago we did Turning Point. And on Turning Point, we talked about stocks that we felt were at levels where we want to keep an eye. Maybe they were going to break out or maybe they were going to pull back, but they were just getting close to key areas, whether it's price, support or resistance, or maybe a moving average. And now we're going to go a week later and take a look at the stocks we talked about last week to see whether, what they did. So, Mary Ellen, what'd you have for last week, and did they do what you thought?
Well, I'm not overly impressed. This first name we can take a look at here is CMD, can't tell medical. And what I was attracted to here was this break up above this 200-day simple moving average, with an eye toward the stock having more of a possibility to advance further. It's down about 1.8% on the week, and it still looks constructive. I will say we've had that shorter term simple moving average up through the longer term, that golden cross. Your 50-day is now up in an uptrend, but realistically, it looks to me that it may take a little more time before liftoff. The good news is it is finding support at this upward trending 10-day. Your RSI is still positive, as is your MACD. So we could still reverse, but I'm getting a sense that it has a little more work to do before we can continue this potential upside advance. And I don't.
You do have some others? I mean,
I did, absolutely. And we can go ahead and take a look. ICUI, this was another medical stock that had a very, very similar, I think you're going to see a pattern here as far as what I was looking and focusing on were these potential downtrend reversals as they start breaking up above possible downside resistance. And we can see that this stock is DOA as well this week. It's down about 1%. So just kind of languishing. These are the kind of names where it's going to take perhaps an earnings report or something to really reignite and spark potential more upside. Again, good news, it is finding support at that upward trending 10-day simple moving average. IART was another one that I had last week, and very, very similar in the healthcare space, finding support at this upward trending 10-day simple moving average, but also not in a go nowhere environment this week. Still looks constructive. If you own it, I would stay with it, but ideally in this type of environment, you want to be in those stocks that are participating in the uptrend. We talked about the markets hitting a new high in price. Last week was a whole different animal. There was a lot of uncertainty going into last weekend's trade talks. So this is Xilinx, and this is a semiconductor stock. Semiconductors were poised to really outpace because in this trade talk, they had the most to gain. And so we did see Xilinx start to pop, but it is pulling back this week for the latter part of the week. So we can just take a quick look at that semiconductor index, and you'll see that it really is struggling this week as far as this is that gap up. Xilinx, as I mentioned, is a part of this industry group, the semiconductor ETF. We can see that gap up. It's constructive, as is Xilinx, still finding support at that upward trending 10-day simple moving average. But the fizz has gone out of the pop. And then one other name that we can take a quick look at is Eaton Vance. This, of course, is an asset management company. Let's go ahead and pull up the daily on that. This one actually is up 1% for the week. So it is continuing on its uptrend here, but not overly dynamic. You can see the RSI is positive, as is the MACD. We've broken above key support, above these key moving averages. So it very well could continue to lumber higher, but not particularly dynamic. And then LYFT, this is the IPO lift. And this stock, I can tell you, is not having a good week. It is down. Let's just see if I can pull up, but we can see the stock. This is the last several trading days. It's down another 2% today. It is finding support at this 50-day simple moving average, but I got to say my batting average not so good last week, Tom.
Well, and I really wouldn't look at it that way. I mean, I don't look at these stocks necessarily to say I think they're going to go up or they're going to go down. I just think it's really important to point out some of the key technical areas on the chart that we should be focusing on. And you know, if we get up against like a resistance level, if we break through, that's bullish. If we don't, doesn't necessarily mean it's bearish. It's just that the stock may struggle for a bit, and we may see a little bit of rotation. So some of the stocks I looked at last week, Applied Materials was one. AMAT, you can see this was the prior high. I really like Applied Materials, and I talked about the fact that it's just been building more and more relative strength within the semiconductors. We actually bottomed on the stock in terms of relative strength all the way back here in October of 2018. Notice the stock went down one more time, but its relative strength went up. So a little bit of a positive divergence there. And as we keep moving up, you can see that the relative strength is moving right up with the price action. Looking back to May, look at the stock holding on to price support, even though semiconductors were falling apart. So all these little signs, I think, are adding up. Applied Materials did break out. It did go through, but look at that black candle off the uptrend. And if you look, these black candles off of uptrends many times will signal a move back down. And that's exactly what we've seen here. But I think another turning point's coming on Applied Materials because I believe it's going to hold its 20-day moving average. So I look for a turn back to the upside here on Applied Materials. And I do think that this overhead resistance was something to have been watching. Manulife. Some of these will be really clear. Others maybe not quite as clear. But double top here around 1840. This one continued moving up. I like the fact that we've been able to get up above 1840 and hold it now for 3 days. We're in the this is in the life insurance group. You can see which is breaking out. Manulife has been a leader, but then it's simply kind of been consolidating on a relative basis of late. But a breakout certainly will not hurt this stock as we go forward. Next was Intuit, and pointed out this turning point. We were moving up off of the, actually I may have been looking at the 20-day, bouncing off the 20-day, but also a key resistance level up at 270. We went right up there, tested it, and it pulled back. I want to see us get a breakout. I think we have an uptrend and a cup. So I find this to be a very bullish continuation type pattern, and we'll just have to wait to see if we get a breakout or maybe we get a little handle first. But Intuit needs some kind of a lift. And I think, you mentioned this earlier, Mary Ellen, it could be their next earnings report, could be their catalyst. You can see here the earnings report they went down on back in April, but previously we've seen some big moves higher on some earnings reports. So Intuit may need a good report to get through that 270 level, but so far that pivot area is definitely right at that 270 price resistance. Xylem, XYL, here was the top that we saw back at the end of April into early May. We gapped down, ended up coming all the way back, and again, off this uptrend, a little bit of a black candle, pulling back. I love this test off the 20-day moving average, though. I would expect we're going to see a breakout. This is a stock that has been leading in the industrial machinery space, which I talked about earlier. Here is the industrial machinery versus the S&P. So far, still holding on to this relative price support. If it turns back up, you got one of the leaders, and I would be looking for a breakout. XYL, interesting. And just a couple more here. Let's take a look at MXIM, Maxim Integrated Products. We were moving higher last week, but we pointed out the overhead resistance that was approaching. Look at the black candle that prints right there, bounces back. But again, you've got another stock relative to the semiconductors that's been performing really well and holding up very well. So I think this is a stock that will eventually make its breakout. Let's see, two more. The first one is INCY. This is in that biotech space. Remember, we were talking about this one pulling back from this prior high and hitting that 20-day. Well, we're bouncing off of it so far, continuing to move back to the upside. Not exactly a rounded cup, but it kind of gives you that feel where you're going all the way back down, consolidating, coming back up, testing that overhead resistance, pulling back in like a handle, lesser volume, testing the 20-day. A breakout above 89.90 would be very bullish here. And then the last one I had was Deere. And Deere, if you recall, was going straight up. And I said, we need to be careful because we've got this overhead resistance just above that 167.5 area, probably about 168.5, 169. Look what happened on Monday. We gapped up, hit that resistance, and now we're pulling back. Now, all these things I think are really important if you're a short-term trader. If you're holding Deere longer term, these individual moves, that you see on the chart probably don't mean that much to you. But if you're short-term trading and you see a stock make a move all the way up to 168.5, 169, hit resistance, and you get out, when they do pull back, let's say back to the 20-day moving average, you can jump back in. So I think that it really depends on your outlook and your trading style and strategy and so forth. But that's the whole idea for me when I look at this. And, we talk about turning points. Who cares if you're holding for 20 years? But if you're trading, these levels can be extremely important. So let's pull up that summary slide, go over the stocks that Mary Ellen and I just went over. And then we will get into our final segment, which is momentum sleepers. And, when we look at momentum sleepers, Mary Ellen, I think that the key here is, we're not looking at stocks necessarily that are breaking out. The market's been breaking out, but there could be stocks that are simply waiting for us or waiting for some catalyst to begin leading again to the upside. So they may just kind of be, meandering.
Idling. They're idling.
Yeah, exactly. Idling. What do you have for momentum sleepers?
Yeah, so I have a couple of stocks, of course, and the first name that we're going to look at is in the vibrant payment processing area. For those of you that follow closely, Visa, MasterCard, they've all been really doing quite well. This is Global Payments. GPN is the ticker symbol, and we can see the stock really has been a big winner here, certainly going into this the period going into June. But since that June period, the stock's price did peak here at 161. We've really been in a back and fill type of a trading range. So as we said, the stock is idling, if you will, and it is continuing to find bullish support at this upward trending 10-day simple moving average. And as such, when stocks do take a break, if you will, you'll find that the MACD will tend to at the very least move sideways. Oftentimes it'll gravitate to this net neutral area here. And so we are seeing just that. And so we can also take a look. It's helpful to look historically at a stock to see when it has these basing periods. I'm taking you back to this March into April period where it has a back and fill, it's in a trading range, and then at some point it will break out of that, hit a near-term high, and then continue its ascent. So we can see right now we are in that similar back and fill fashion. So I would look for a break above that 162 and for a sense that the stock could very well be having another leg up, advancing. And so I have a couple of other names as well that we can take a look at. Also in that payment processing area is Discover Financial, DFS, and this was another big winner going into May. Fell out of bed with the broader markets, but now more recently, after this advanced 6-week period of back and fill, this is what we were talking about with GPN, the stock really right now is starting to, what I say, wake up, but it is poised to break out. If we can break out of this 82, sure enough, we could very easily see another leg up. We can see that that RSI is trending upward. It's above that net neutral 50, and then the MACD, a little sleepy. This is what I talked about when these stocks are in a back and fill base building period. The MACD will gravitate to this neutral, but it is looking like it's waking up a little down here. So we could see this momentum sleeper pick up. And then another name that we can look at that was also on fire earlier, but is more recently not doing much. Let's go ahead and take a look at CPRT is the ticker symbol. This is Copart. It's in the auto supplies space, and that really has been quite dynamic. We can see it was a big winner again, moving into this June period, really did nothing but go up while the rest of the market was deteriorating in May. So a real momentum stock, but again, back and fill here over the last 4 weeks. We can see the stock is potentially building itself up because we can go back to this March period into April, another 30-day back and fill base building period from which it was able to advance and go higher. So right now we are, again, kind of building that base back and fill, but we do still have that RSI. I talked about the MACD, but it's still positive above this net neutral zero, so in positive territory. And we can take a look at, we talked about banking stocks. So this, normally when you talk about momentum stocks, if you're a purist, you wouldn't throw banks in there. But I did want to point this one out. This is MTB. It's a regional bank, and it has really been in a go nowhere environment now for over 2 months, but today in particular, but certainly this week, it looks poised for what I would say potential liftoff. We can see during that base building period, this MTB, the RSI, really just waffled around this net neutral 50. But more recently, take a look at that uptick here in the RSI. It's sloping upward, trending more positively. MACD also during this go nowhere period, waffling around this net neutral zero, but that also appears to be lifting up. So that would be another potential momentum sleeper.
Yeah, sounds good. There were some good ones in there. I'm going to go ahead and start off with eBay. eBay had gone sideways here for a few months, March through May, broke out, and now is kind of doing the same thing, just kind of sideways consolidating. But after this consolidation and then breakout, I'm expecting this rising 20-day moving average. I think that we're starting a new uptrend. So I kind of view this sideways consolidation maybe a little bit like we had back here in January, where we broke out above those prior highs, sideways consolidated, and then continued moving higher. Here we've got the high, the sideways consolidation, the breakout, and I think we're just simply consolidating. Nice volume trends in a very nice group. And the stock actually has come off its relative low back at the beginning of June and looks like it's poised to continue moving higher. So breakout is what I'd be looking for on eBay. But I do think that for now, anyway, we're seeing it just kind of sleeping, little sleeping giant that I do think we will see another breakout coming. All right. Next up was actually, I think this was JCOM. Yes, JCOM. Now, this one hasn't made a breakout yet, but you can clearly see the double top. And after the huge move up, very strong volume, I see a cup right now, and I think we're just in this handle. Very, very nice volume trends on the right side of this cup, which I love. I think it's just a matter of time before we get this breakout above 90. So I think JCOM is sitting as a really nice momentum sleeper at this point. The next one is Microsoft. Now, Microsoft, you might say, well, it just keeps going higher. But after it reached a high in the middle of June, it hasn't broken out. But look at the software group. The software group did break out. So on a relative basis, I think this is a momentum sleeper. It's been a stock that's been leading for quite a while, but over the last 2 or 3 weeks, it's been lagging a little bit. So I think it's got a pretty interesting little cup, and maybe we're forming just a little tiny handle here. Breakout would be a close over 138, so I'd be watching for that on Microsoft. The next up is OCSL, Oak Tree Specialty Lending Corp. Now, this one's maybe a little bit more of a stretch because when I look at the relative strength, it's been going down now for about 5 months, and it is at about a 7-month relative low. That's a lot of momentum sleeping. It's been sleeping for a while on a relative basis, but it has been breaking out, and I love the volume that came into this stock. Pulled back. Look at that bullish engulfing candle right at the 50-day and gap support. And now it's trying to move back to the upside again, and still volume trends remain pretty good. So, and it's in a really strong area of the market. So with it still being a pretty decent performer versus the S&P, you can see higher high, higher low, higher high, higher low. This one's been an extended sleeper, but it's one maybe you might want to keep on your radar if we start to see a breakout and some additional relative strength. PayPal, after the huge move up, we've been sideways consolidating, testing the 50. And another one where you're seeing a breakout in its peer group, but relative strength weakening. But this has been a really strong long-term performer. I think that this is simply just consolidating really nice gains. I think if we were to go back down and maybe close below the 50-day, I'd have to reevaluate. I don't think we're going to do that, though. I expect we are going to make another breakout there. TGNA, Tegna, after a huge move up. And let's keep in mind, this is a stock that went from 10.5 to 16.5 in about 4 months. That's a 60% move in 4 months. I think it warrants maybe a little bit of an extended period of consolidation, which is what we're seeing. Stock is beginning to show some strength again, though. So I want to pull back. If you notice that 20-day moving average holding, I think this is one that could see a resumption. You can see after a huge relative move up back at the end of 2018, we pulled back on a relative basis, and then look at us break back. I think we're doing the same thing again. So let's watch a breakout above 1650 would be very bullish. And then the last one I have is VSAT. Now, this one is opposite because I think it was a momentum sleeper, but I just wanted to point out that they can break down. And VSAT, after gapping up back in May, came back down, held gap support, went sideways. And I would have considered this a momentum sleeper. But look at that breakdown and the increasing volume here on this movement to the downside. I don't know that I would call this momentum sleeper anymore. I think the stock has broken down, so I would avoid a stock like this. And those are our momentum sleepers for the day. Number of stocks that we went over there, but I think giving everybody a chance to look at some different stocks, which I think is great. And now, before we go into the poll, I'm not ready to bring up the poll just yet. Let's take a look at the bank index. So I'm going to just share my screen here for a second. Here we go. And so, Mary Ellen, the last week or so, we have seen, after moving down this sideways consolidation, trying to get through this 440, 443 area, we finally did it at the end of June. And we are continuing to move higher. And now we're starting to get a little cooperation from the 10-year Treasury yield. So the question for the poll was, among some large cap bank stocks, which of those would you be comfortable owning at this point? And I don't know, Mary Ellen, if you had a chance to look at some of these stocks, but let's first check out what the audience says. And then maybe that'll give you a minute to talk about what you would say, Mary Ellen.
All right.
So there we have it. JP Morgan, I'm not surprised. It's a very well-known bank. It's obviously one of the largest. It has been a great performer on a relative basis. I have a favorite on this list, though, and it's not near the top. How about you?
Yeah, I think you revealed your favorite earlier. You took the cat out of the bag. Yeah, and so they are all wonderful stocks. Citigroup right now is certainly my favorite. I talk about when groups start to come in and move into favor, those stocks that are first out of the gate, they do tend to be your continued leadership names, and Citigroup would fit that profile. It's broken out of a nice 2-month base, and it's done so on nice volume. And actually, we're not quite out of the woods yet as far as entirely breaking out, but we certainly are very close, and it has double-digit growth prospects this year and next, and it does look, from my work, poised for more potential upside. Yeah, certainly from here.
I wouldn't disagree with that pick. I actually think I did consider Citigroup as well. It did earlier today trade at a new 2019 high. It's got just a little bit of work to do to take out the relative or the absolute high that it established back here in September. Of 2018. So a little bit more work there, but look at this relative chart. You mentioned, that it's been one of the leading stocks, and this is, drives home that point. We bottomed back at the end of December of 2018 on a relative basis, and Citigroup has been leading. So when I look at this, I expect they're going to have some really nice results when they come out. Would you make that assumption?
I would. It is looking quite constructive. They're due out July 15th, as well as a number of other big banks. So all eyes on that.
Yeah, I went with PNC for many of the same reasons. The relative bottom for 2019 came in February. It's been trending higher on a relative basis. Beautiful move. The audience went with JP Morgan. So let's pull this one up again. Take a look. We've got overhead resistance around 116 that we need to negotiate. Like I said, we broke out of this little inverse or reverse head and shoulder pattern with volume. So I think this is one that can continue moving. All right. Well, that brings us to the end of the show. Mary Ellen, great job.
Yes.
I want to thank all of you for being with us today. Hope you had a great 4th, by the way. Please remember to complete the survey as you exit. As a quick reminder, Market Watchers Live airs 5 days a week, Mondays through Fridays from noon to 1:30 p.m. Eastern Standard Time. Have a great Friday afternoon, everybody. Enjoy your weekend. Be safe. See you on Monday. Happy trading.